Hey there, Iggy the Investing Iguana here, and welcome back to another exciting episode on the Investing Iguana YouTube channel. In today's video, we're going to take a deep dive into Mapletree Logistics Trust, or MLT for short. As a leading logistics real estate investment trust in the Asia-Pacific region, MLT has been navigating some choppy waters lately, particularly in China. But despite these challenges, many analysts remain bullish on the company's long-term prospects. In this video, I will share about MLT's resilience amid China's COVID-19 challenges, in-depth analysis of MLT's financial performance as well as analysts' bullish outlook on MLT's future. So, buckle up and join me as we explore the reasons behind their optimism and what it could mean for savvy investors like you. First things first, let's talk about the elephant in the room, China. MLT's portfolio occupancy in the country took a hit in the first quarter of fiscal year 2024/2025, dropping from 97.8% to 96.7%. The main culprits behind this decline were the COVID-19 lockdowns and slower leasing activity. It's no secret that China's strict pandemic measures have put pressure on businesses across the board, and MLT was no exception. But here's the thing, MLT's management team is on top of it. They reported that occupancy rates in China have already bounced back from April's low of 90% to a healthier 94% as of June. This recovery is a testament to MLT's proactive approach to lease management and their ability to navigate challenging market conditions. Now, let's delve into the numbers behind Mapletree Logistics Trust's, MLT, financial performance. For the first quarter of FY 24/25, MLT's gross revenue experienced a modest decline of 0.3% year-on-year, totaling 181.7 million Singapore dollars. This slight decrease was primarily attributed to a weaker performance in China, coupled with the absence of revenue from properties that were divested and the impact of currency depreciation, particularly in the Japanese yen and Chinese yuan. However, this decline was partially offset by the strong performance of properties in Singapore and Hong Kong SAR, which contributed significantly to the trust's revenue. Additionally, the revenue boost from recent acquisitions, completed in the same quarter and the previous fiscal year, also helped to mitigate the decline. This mixed performance highlights the trust's diversified portfolio and its ability to navigate challenges in specific markets while leveraging opportunities in others to maintain a stable revenue stream. Despite these headwinds, MLT managed to maintain a resilient operational performance with a 95.7% occupancy rate and 2.6% positive rental reversions. The company's net property income, NPI, fell by a modest 0.9% year-on-year to 156.7 million Singapore dollars. It's worth noting that on a constant currency basis, MLT's revenue and NPI would have actually registered growth of 2.1% and 1.3%, respectively. At the distribution level, MLT's financial performance continued to be impacted by higher borrowing costs, which rose 9.4% year-on-year to 38.5 million Singapore dollars. Taking into account a lower divestment gain of 5.7 million Singapore dollars compared to 8.4 million Singapore dollars in the same quarter last year, the amount distributable to unit holders declined by 7.4% year-on-year to 103.7 million Singapore dollars. As a result, the distribution per unit, DPU, was 8.9% lower at 2.068 cents on an enlarged unit base. Despite the short-term challenges faced by MLT, many analysts remain optimistic about the company's future. As of July 27, 2024, MLT's stock price stands at 1 Singapore dollar and 30 cents, with a market capitalization of approximately 6.5 billion Singapore dollars. Over the past year, MLT stock has declined by 24.9%, and in the last 7 days, it has seen a decrease of 4.4%. However, looking ahead, analysts' 12-month average price target for MLT is 1 Singapore dollar and 64 cents, representing a potential upside of 26.15% from its current price. This indicates that experts still recognize MLT's strong fundamentals, including its strategic acquisitions and the potential upside from China's economic reopening, despite the recent stock price decline. MLT's management has also hinted at opportunities for acquisitions in the near future. With the rising cost of financing and construction, they believe that logistics assets could be available at more attractive prices. This means that MLT could potentially snap up some great deals, further strengthening its portfolio and driving long-term value for unit holders. In the latest news, MLT is expecting persisting negative rental reversions in China, as reported on July 12, 2024. However, the company has also completed the acquisition of a logistics asset in Vietnam on June 21, 2024, showcasing its continued efforts to diversify and expand its portfolio. Let's dive into their numbers like we're swimming in a pool of financial data. First off, their revenue and net property income are holding steady, like a rock in a stormy sea. It's not explosive growth, but in these choppy economic waters, stability is king. Their occupancy rate is sitting pretty at 95.7%. That's like having almost every seat filled on a jumbo jet. Now, here's where it gets interesting. Mapletree is playing chess while others are playing checkers. They're snatching up shiny new assets in Malaysia and Vietnam, which is like buying beachfront property before the tourism boom hits. At the same time, they're saying goodbye to some older properties in Singapore and Malaysia, but at prices that'll make you whistle. We're talking about selling above valuation. It's like flipping houses, but on a massive scale. Their debt game is strong too. With 83% of their debt locked into fixed rates, they're like a surfer who's found the perfect wave to ride out any interest rate storms. And with an average debt maturity of 3.7 years, they've got breathing room to plan their next big moves. So, what's the bottom line for us iguanas looking to grow our nest eggs? Mapletree Logistics is showing us they've got the smarts to navigate tricky markets. They're not just sitting on their assets, they're actively reshaping their portfolio for the future. It's like they're pruning a bonsai tree, carefully shaping it for long-term beauty and strength. If you are keen for a deep dive in their financial results, watch out for my in-depth video on Mapletree Logistics Trust. So there you have it, folks, a comprehensive look at Mapletree Logistics Trust and the reasons behind the optimism of many analysts, despite the short-term headwinds faced in China. As always, remember to stay informed, stay curious, and keep on investing wisely. If you found this video insightful and valuable, be sure to smash that like button and subscribe to the Investing Iguana channel for more in-depth analysis and expert opinions on the world of finance and investing. Your support means the world to me, and I can't wait to share more exciting content with you in the future. Until next time, this is Iggy the Investing Iguana, signing off.